Join TWR in 2023. Sunday Motivator. What's hot and what's not. Here's how your markets closed on Friday. Definitely had a big push. We hit that resistance point, and then we ended up selling off into the closing of the market bell. Here are the futures, and it points to a lower opening. Obviously, we'll see what happens in pre-market, but as it stands right now, we should expect a lower opening. Market summary, you can see every major index was lower, the SPY, the Q, and the I, and we had more declining than advancing tickers, which is always a sign that we're looking for some downtrending pressure. Dark pool, no surprise, SPY leading the way, followed by Q, got Apple, and then you got some of the big money-making tickers that are in there as well. Flow is pointing towards a bearish opening as well. You definitely got more money to the short side of the house than you got going long currently. Here was the heat map. Every sector was red, with the big ones being consumer discretionary utilities, followed by financials and energies were the least lagger of the bunch. So we'll look for a little bit of momentum push coming back into consumer discretionaries, but some of these that didn't sell off as much as the others could see a robust movement towards the downside pressure. These are tickers right here that are overbought. They're over 70 on the RSI, so we'll look for some downtrending pressure on a few of these tickers. Definitely when things start to approach that overbought side of the house, we look for the pressure to the downside because people will want to take profits from uprising trending recently in the ticker. And then these right here are oversold, and it's the same idea as with the overbought. These are oversold, which means they might have had a knee-jerk reaction, and we look for the reversal from the bottom on some of these tickers. Here's your top 15 tickers that are trending on social media platforms. We're paying attention to a few of these. I like the AI, I like ASTS, I like DRRX, and of course we're paying attention to Uber, Low, and Robinhood, and a few of the other ones, which we'll get to in just a second when we review the upcoming earnings. Here's the upcoming earnings that we have looking for this particular week, going from February 6th to February 10th. In the green are the ones that have my attention, and basically we're focusing on a few movers and shakers that could definitely make some moves. And here's some implied volatility moves for this next earnings week. What we like about implied volatility moves is that it provides us a range going both ways. You know, the expected move is this percentage going both positive and negative. And if we can catch the trend, you can usually make a nice payday out of a particular trade. A lot of these are pushing up into the upwards of the 10% or more range. And that starts to really interest me a lot because those are the ones that we're expecting a dramatic movement off of volatility and can give us a huge payday. Stocks I like for trades. So let's talk about SPY. I think we had a huge run up right from the bottom levels, and I think it's time for a little bit of cool off. So I would not be surprised if we open lower and SPY goes down to retest those 405 areas. So I'll be looking to go short on SPY unless I see the volume and the trending to the upside, at which point we'll just start day trading. But I'm looking at SPY definitely having a little bit of pressure, and for the swing type of trade, looking to the short side. Disney, looking at the chart, I think we had a huge run up, and I think Disney slides to the downside, and earnings could be a catalyst for a push to the upside, but I think we find some profit taking if we do slide upwards and we come back down. So I'll be definitely looking to go short on Disney. Uber's more of a 50-50 range. We have a little bit of a gap to fill to the downside, so I wouldn't be surprised if we slide a little bit on earnings. However, they're profitable, and compared to their other personnel or other people that are in their industry like Lyft and a few of the other ones, Uber is the main winner in that sector. So definitely they do got a lot of power as far as it comes, but I think that they probably will start to slide a little bit as these earnings are kind of rolling out less than normal, and so we might see the downward trending clearing that gap and going to find a bounce off of support. In phase, I think we took a huge dump on in phase, and we might actually find some support down here at the bottom. This could be a jumper, and it could move significantly to the upside, so I'll be looking for calls on this one. DuPont, we're in a box consolidation zone, and I think we break to the downside. I don't think we have much upside, and a lot of these other industrial type of names have done poorly on this particular earnings going in this quarter. So I think these guys slide, and we'll see this trend down to the downside. And finally, Royal Caribbean. This one could be a surprise or, booking are pushed out on these particular tickers. I do think that we did have a nice run. We came out of consolidation. We pushed to the upside. So typically when you see that breakout of a consolidation to where you peak, you got a little bit of a pullback that comes back to it. So I wouldn't be surprised if we pull back down, we test those lower levels, find support, and then we bounce from there. And finally, the last one I got for you is Chegg. I like this at the level we're at currently. We got a nice gap to fill at the top. I think Chegg pushes to the upside, and this could be a fantastic trade that makes some people some money. So I'll be looking for calls at this one on this ticker. That's it, team. Don't forget, Traders War Room Trading University is happy to announce open registration for our next option fundamental course. Did Wall Street make you feel like a complete loser in 2022? Or was everything going great and you blinked just for a split second and got repeatedly kicked in the you-know-what over and over again? TWR is here to help you. Our university's fundamental course is an in-depth 5-week-long course that's done live via Zoom platform. Our virtual classroom is where you can interact with the instructor, other students, or see copies of the classes right there on the platform and rivals that of traditional online education. Testimonials from previous class graduates are proof that our cradle-to-the-grave approach works in giving you consistently profitable skills to trade options. Registration is open today. Links are in the description or go to traderswarroom.com. I will see you there. Let's go to war. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this? Or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at traderswarroom.com. Let's go to war. Join the TWR Investment Club. Check out our free chat to learn more. Make the market bend the knee in 2023. Join TWR and bow to no one. The link is in the description or on the website at traderswarroom.com. Let's go to war.